new business. So we're going to certify our tax levy. So Mary Kay?
All right. So this evening, it's that time where all the final numbers have come in for this school year. And we'll be looking at certifying our levy. That levy then will go on to the city of Two Rivers and the town of Two Rivers. They take that information and then create the tax bills, which go out to our property owners in December. Just to give you a little bit of background, we had 2 finance committee meetings prior to this evening's meeting of actually setting the levy. And the purpose of that was to, first of all, set the stage for what's happening this year. Of all the levies that Two Rivers has set, this year is by far the most complicated than what I've ever seen before. So the first meeting was to kind of set the stage for what's going on, and the second meeting was to evaluate the final numbers once they were in. So in that case, let's get started. So what makes this year's levy so different? Well, first of all, a little bit of background. Two Rivers School District is a low spending school district. So for last school year, our revenue cap base was at $10,000 per pupil. And when I say revenue cap, I mean by how much revenue we can collect from 2 primary sources, that being property taxes from our local property owners as well as state aid from the state of Wisconsin. So for now, this new biennial budget, they increased, the state increased the low spending school districts to $11,000 per pupil. So for Two Rivers, what that means is that $1,000 increase per pupil, when you multiply that by our 3-year rolling average, that's over $1.6 million $6 million in new dollars coming to our annual budget. Well, you look at that and you think, okay, that's wonderful. That's great news. However, where does that new money come from? And that's where we have our challenge this year. A couple things. First of all, this year our state aid, which is an offset to our property taxes, has decreased by $177,081. So think of it like a scale. As one side goes up, the other goes down, and vice versa. So if state aid goes down, property taxes go up. Our high poverty aid, which we received last year, was also eliminated in the biennial budget. This aid was used to offset the 2022-23 taxes. Another important component to our tax levy are our vouchers. And this is the amount that, or I should say, the amount that is being collected and paid per student this year has increased. When you bring all those factors together, you have what we would call a perfect storm of a tax levy, and we'll kind of get into that in a moment. The one thing that I believe is the most important takeaway from this is that all of this challenge has nothing to do with the 2022 referendum. That is not where this $1 million challenge is coming from. So a little bit of background. Where has our tax levy been? It's interesting because Microsoft Excel is the one that put in the yellow line. That's called a trend line. So despite the fact that you look at the green line with the red markers for every year, kind of looks like the tax levy's bouncing around a little bit, there is overall a trend that it has been going down over the years, and you can see that with the yellow line. I don't have any numbers attached, but you can see we have been a little over 6 million down to last year's low point was just a little over 5 million. That same information now, but instead in the form of a mill rate or a tax rate. This is the amount that's applied per thousand of equalized value or fair market value of property. You can see the 10-year plus history, the trend that shows it also going down since the 2012-13 school year. At the same time as our mill rate goes down, the way it works is that your property values are going up. And you can see that happening, especially over the past 2 years. Last year's increase in property value in the district was over 17%. This year's was 14%. But you can see in the middle of that screen, we had a lot of years where that property value really didn't move at all. So that's kind of more of the trends that for a long time we were used to. And now these 17% jumps and 14% jumps are a little tricky to deal with, especially when you want to make sure that you are trying to keep your tax levy as level as possible. So the other component to this is vouchers. So how do vouchers work? So the first 2 points, and I'll read those to you. The Wisconsin Parental Choice Program is a statewide private school voucher program. It was enacted and launched in 2013. It allows students whose family meets certain income qualifications and are not assigned to the Milwaukee Public Schools or Racine Unified School Districts the ability to attend a participating private or religious school of their choice tuition-free. So for this year, the amount of voucher per student is $9,893 for grades K-8 and $12,387 for 9-12. For next school year, it's going to be $10,237 for K-8 and $12,731 for 9-12. So how this works is that the total amount of voucher costs are added to or included in the revenue cap, which are included in the levy that you will be approving tonight. So at the end of this school year, the same amount is then deducted from our final aid payment in June. So the money comes in, we collect the taxes, the money goes out. We can't use that money here for local Two Rivers School District students. However, it is part of your tax levy, and it is a big part. In fact, as you can see in the last line, our vouchers have increased $146,248 over last year. So we are up to a grand total of $693,151 that's included in your tax levy this evening for private school education. So this is what this looks like, kind of following the path of the other graphs. This is what this looks like as far as what that voucher levy has done over the years. 2015-16 was the first year Two Rivers was impacted by vouchers, and you can see how much it's grown since then. So now we're going to pause on the screen, and I want you to take a look at the sheet that is at your places this evening. We have had 2 Finance Committee meetings with a lot of very intense discussion about how to not necessarily fix, but come to a meet in the middle resolution for this levy. When you look at this sheet, we have 6 columns on here total. The ones on the left that are in red are the tax levies for the past 4 years for Two Rivers schools. There is a column in blue that says full tax levy, and then the far column on the right in green. What we're looking at here, and we want to get a good comparison of where our tax levy has been over the past years. When I prepared our tax levy for the first time, I knew that we were going to have a situation where we would be best to get board input and finance committee input as far as how to handle this. So I'm going to focus now on that blue column for our full tax levy, and then we'll compare it to other years. So our full levy, starting with our revenue limit before exemption, so that's taking the new amount per pupil, multiplying it by the students that we have here, is $18,073,000. We're adding to that a transfer of service amount of $116,705, and then we get an addition of $45,476 for our prior year uncounted pupils. So those are students that came in, residents that we didn't get to count last year, but we get to add them to our revenue cap for this year. The next 2 lines, the $678,086 and the $15,065, is a total of our vouchers for this year. That brings our revenue cap to $18,928,332, which compares to last year at $17,294,000. So we're looking at a difference of over $1.6 million as an increase. From there, we take a look at, or we deduct our equalization aid, which is our state aid. That's the largest part of the revenue cap, $14,743,689, and that is $177,000 less than last year. We have our computer aid and exempt personal property aid, the same at $27,764. And then we have our levy for our debt service and Fund 38 of $265,801. So in the end, what this trickles down to is our operating levy under this scenario of $3,891,078. So that's our start for what the levy will be. To that, we add, again, our Wisconsin Retirement System refinancing payment of $265,801. And then the first of 20 payments for the 2022 referendum, that being $2,760,543. I looked at the debt schedule today, and it is amazing how Baird made that so level. We are at 2.76 million every year for the next 20 years. Obviously, the principal and interest component will fluctuate over time, but they really made it very level for us. So that was a really good thing. And then this year, school resource officers, 158,000. That's for the officers that we have in all of our buildings. We're not doing a levy for the community programs because we actually have money left over from last year that we're going to utilize instead. Under this scenario, when we bring all of that together, the levy actually ends up at $7,075,422. That is a 36% increase over last year. That is a levy that is off the charts for Two Rivers, and that's why the Finance Committee came together to come up with different plans as far as what can we do to fix this. Well, what other districts are doing and what Two Rivers is looking at doing is what we're looking at is levying the full amount in Fund 10, which is our operating fund. So we're basically saying to the legislators, thank you very much. We will take everything you are offering to us. But then instead, we are looking at reducing the levy that we have for our debt service, which would be for the 2022 referendum. A number of districts are doing this. I have had conversations with Brian Brewer about this at Baird, and he concurs with this. There is one caution coming up, and I'll explain that in a moment. But what we would do, again, is levy everything that we can under the revenue cap, but then reduce the levy in Fund 39, which is for debt service. So in our discussions with the Finance Committee, we talked about, well, how much do we reduce it by? So we looked at 300,000, 500,000, 7, 9, and up to $1 million. In talking to Brian, one of the things that he cautioned, because I even said, well, what if we went to 1.3 million? And then he said, well, how much can your budget afford? So I'll explain that. So we actually, through many discussions, looked at the $1 million as being probably the best, and I'll show you how we got there. So we looked at our revenue limit for this year, again, the $18,928,332. Compare that to last year, and we have an increase of $1,633,514. So we broke that down. Well, we have to pay $146,000 more for vouchers. Our own budget needs some money out of this too. It needs $441,000. So how much can we actually afford to part with and transfer over to debt service? That number, $1,045,953. So the Finance Committee settled on $1 million. And what we would do, again, is levy all the way to the revenue cap in Fund 10, but reduce the Fund 39 debt service levy by $1 million. And we would literally write out a check and transfer it that way then from one account to another. Because we keep these dollars in different checking accounts. We have to do that by law. So we would transfer the money over that way. And now one of the things, and this is the caution from Baird, any reduction in the debt service levy for this year will return to the original value next year. So our total principal and interest payments are $2.76 million each year for 20 years. So that's the caution, just to be aware of that is going to be that much next year. But the understanding, though, is that we are going to get state aid on these dollars. State aid will come next year, and then that will help offset the tax levy for next year. A couple things to keep in mind, too, when you look at the sheet with the red columns. One of the things that doesn't help is that last year's tax levy was the lowest. That was the lowest it has been in 4 years. The unfortunate thing is that that's the levy that's going to appear on the tax bill. So it makes it look like a bigger increase because we're comparing it actually to a very low year. When you do the $1 million transfer and you reduce that levy to $6,075,422, that actually is only $409,000 more than what the 2019-20 year was, which is the column on the very far left. So if you compare the very far left to the very far right, Again, a little over $400,000, and that was 4 years ago. Well, over 4 years, what has happened? Salaries have gone up, our other costs have gone up. I mean, we have a business to run, basically, as we educate our students. So that kind of puts it a little bit more in perspective. But again, it's very complicated this year. The Finance Committee's recommendation was for the $1 million reduction in Fund 39. So the full levy being $6,075,422. That is a $900,140 increase over last year. It does bring the mill rate to $6.79 per thousand of fair market value. And it's a 17% increase in the overall levy, but it's a lot better than going with the full levy, which was 36.7% increase. Does anyone have any questions?
I think you said next year state aid will be increased. How do we know that?
Well, state aid follows on any of your expenditures. So I can't guarantee it's going to be increased, but what we spend this year, like now we're taking that million, instead of just keeping it in our fund balance and not using it, we're spending it on debt service. So that will get state aided next year. Plus, I think this is the best meet in the middle plan, because the most that we can part with of this levy and still make our operating budget operate is that $1,045,000. So the more aid that we can get next year, unfortunately, in school finance, it's 1 year at a time.
Okay. Any other questions? So we need to certify. What action do we do now? Okay. Okay. Alrighty. Can I get a motion to certify the tax levy?
I'll second the motion.
Okay, all in favor of certifying the tax levy? Nope, sorry, roll call. Sorry, roll call, please.
Mr. Peterson?
Yes.
Mrs. Valdre?
Yes.
Mr. Klinkner?
Yes.
Mr. Williams?
Yes.
Mr. Shavlik?
Yes.
And the motion's carried.
Just to clarify, it is with the $1 million reduction, correct?
Mm-hmm.
Okay.
Yes.
At the $6,075,422. Okay.
Yes. The one that you just said last, yeah.
Just want to be sure.
Mm-hmm. Everybody agreed on that one, yes. And Mary Kay, thank you for your hard work on that, and the Finance Committee, because it sounds like it was a lot of detail to figure out, and thank you for that hard work. Mm-hmm. Excellent. Okay, next.